Hi, my name is Taylor Lapidus. I'm with the Precision Team, Keller Williams, Arizona Realty. Thank you very much for watching our blog. Today I'm going to unveil my plan to solve the housing crisis in America. The focus of my plan is obviously, like all the others, to avoid foreclosures. Like some of the other programs, I am focusing on the short sale process. I really think the short sale process is the key to getting the people that cannot make their mortgage payments out of the home without going into foreclosure, and to help maintain a threshold where you're keeping as few people as possible who can make their payments from taking advantage of the program and jumping in. How my program would work would be that a homeowner who is distressed, who needs to avoid a foreclosure, would go to their bank and begin the short sale process, usually through a real estate agent or some attorney. The short sale would result in a certain deficiency. That deficiency would then be paid back to the bank, not in full, a percentage, maybe 10%, maybe 20%, through the government's $75 billion modification program. The person who received the short sale, so as not to leave this burden on the taxpayers, the people who've made their payments and who have done things right and are sitting with their investments and not leaning on the rest of us to make their home payments, the homeowner will then pay back the government on a low interest, long-term note, whatever the agreed upon amount is that the bank receives on top of that short sale price. The bank will get the short sale value, which is the current fair market value, which is at or above what they would get if they foreclosed. As well, they would get whatever percentage is agreed upon through the modification program funds that we're talking about, whether it's 10% or 20%, we can work the details out. So they're getting significantly more than if they just foreclose on the home and try to sell it themselves. In a lot of different ways, they're getting a lot more. They will agree, in turn, to guarantee they will not pursue the homeowner for the deficiency. As it stands now, anyone that goes through a short sale or anyone that goes through foreclosure can be pursued by their bank, and this varies from state to state, but they can be pursued by that bank for up to 20 years, which doesn't let people rest easy. This, you never really get this behind them. It's difficult to move on with that looming. The taxpayers get paid back. A long-term low interest. Let's say you're deficient $100,000. So let's put some numbers on this. $300,000 what the loan was for. The home is only worth $200,000 now. You get a short sale, the offer comes in at the fair market value of $200,000, submitted to the bank approves the short sale, they get $200,000 from the sale of that property. Then they receive an additional 20%, 10%, 30%, maybe even 50% of the deficiency. Whatever it is, we work it out. Let's say it's 50%. Let's say they get $50,000 from the government through the $75 billion fund that's available. So they're now incentivized to do the short sale, to do it quickly, and the homeowner gets out from underneath a much larger $300,000 mortgage payment. That $50,000 that the bank just got, they agree to pay back to the government, to the US taxpayers, on, let's say, a 40-year zero-interest note. That would come out to a payment of roughly $100, $110 a month. So you go from a $300,000 mortgage payment, which on a 6% rate, not even including taxes, insurance, and all the other things that come with owning a home, you're at roughly $1,800 a month. You go from $1,800 a month down to $100 a month with a guarantee that you're not going to be chased for the deficiency. You should still have plenty of left to rent a home, to support your family, to do the things you need to do to survive. In my opinion, this is the way that America moved forward. People who can make their payments are going to be less likely to try to take advantage of this program. Number one, just with a short sale, they would have to move, and most people don't want to move. If you're talking about loan modifications that talk about reducing principals, it's really easy for someone who's upside down on their loan but can still make the payments to sit there and call in once a day for a couple weeks and say, hey, I'm going to have difficulty making my payment. Even though they're not really. They can just say it, and they try to get a loan modification that reduces their principal. Really easy to do. They don't have to move. They don't have any skin in the game. Whereas with the short sale, they would actually have to move at the end of it. Most people don't want to do that. This cuts that out. As well, people agreeing to pay back a little bit. You know, it helps the taxpayers who are supplying the funds, it helps the people who are distressed, and it helps the banks. Everybody wins. My name is Taylor Lapidus. I want to hear from you. What do you think of my idea? What are your ideas? Let us know. You can email us at myopinion@theprecisionteam.com. You can also leave a comment below. Thank you very much for your time. Have a great day.